Hey YouTube, Jason here with DayTradingFearless. Welcome back to my channel. If you're new, welcome. Make sure you guys like and subscribe. And as always, let's jump right into it. So today's video is which is better to trade the stock market, the RSI or the RVI. If you guys don't know what the RSI or RVI is, I'll explain it. RSI is Relative Strength Index, and the RVI is Relative Volatility Index. Think of them, both their momentum indicators, right? So it's one of those things where it's kind of like if you throw a punch, you haven't, and it's the very first punch, it's usually the strongest. Then every punch after is going to get weaker and weaker. You might have some that are stronger than the previous, but usually your first punch is the strongest, right? And it's just kind of telling you, hey, momentum's slowing down. Or what I personally like to look for are what are called divergences. Okay, where we'll make a high, right? That's the first punch. Make a high, pull back, and then we'll make new highs, but you'll see the RSI not go up as high. And same with the RVI, Relative Volatility Index, also shows it. But here's the thing. I like them all for different reasons, okay? With different time frames. I actually like the RSI anything above 15 minutes or more. Okay, 5 minutes you could get away with, but anything higher than anything from 15 minutes to monthly charts, right? I like the RSI. Those are where I'll use RSIs on the chart. Anything below 5, I like to use the stochastic. Okay, so if I'm looking at 1 minute, 2 minute, 3 or 4 minute chart, I usually like the fast stochastics where it only shows the percent D, which would be at 3, right? I have a video up, so you can go back and watch that to kind of see that. But the only time I really like the RVI is when I go to the 512 tick chart. Okay, you could probably do any tick chart, but I've always just kind of used the 512 tick chart. And what happens is this is really a key for me where I like to see divergences. We'll give a good example of, we'll say right here, okay? We could see prices going up. Here, the RSI is going up, but the RVI is actually going down as we're going up. So as we're making new highs, the RVI is kind of showing lacking of momentum going higher, right? So it's not as strong. And so for the 512 tick chart, my favorite is the RVI, especially for kind of looking for lows, right? Think about this. If we zoom in here, and again, this is also for micro scalping, right? So we make a low here on this, we bounce, right? Do the waterfall to the upside. Next candle takes out the low. So we actually have a new low. Here, if you look, everything is the way it should be. But here on the RVI, relative volatility, you actually have the the divergence is we made a new low, we're making a higher low, and what does price do once we break above the previous candle's high? Right, this is our waterfall here. We break out and we start to bounce. So that's probably a really good example of why I kind of like the RVI for the 512. It's just more that micro scalping, really nail the lows. I'm not a big fan of the RVI, anything above the tick chart, especially the 512. That's what I've always used. But again, if you're tick charts, look at the RVI. If you're looking at a 1, 2, 3, or 4 minute, use a fast stochastic. And if you're looking at, we'll just say 5 minutes or higher, usually it's 15, but that 5 minutes is kind of right on the border, use an RSI. If you guys watch my daily or my weekly stock market videos, you guys will see I have a lot of my videos, or all my videos for the daily and all that. When I do it is 15 minutes or dailies usually. That's always the RSI. So as always, thank you for watching. Hope you guys enjoy this. Hope it helps you guys kind of figure out what to use. And until next time, we'll talk to you soon. Thank you.